And one. And we are live. What's going on, everybody? Welcome back to Wolf. Man, we got Bitcoin running 2 or 3% today. A bit of bouncing action on the crypto side of things, and a lot of traders, analysts have been looking for a little bit of up action, potentially before lower. But of course, we have the other side of the timeline who has capitulated entirely, and they're calling for lower. People I wouldn't have expected, by the way, thinking we're going to for sure see the 40s now. So it's been very, very interesting watching the demeanor of various maxis and stuff kind of change through this bear market. So, look, I figured we'll jump on with Roberts as we do each week, talk about the markets a little bit, but I really wanted to kind of cover what everyone thought of like the first half of 2026 now. We've been going here for a while now, obviously, for 6-7 months. It's the beginning of July today. And so there's a lot to look forward to, I still think, good and bad. We still have Trump in here for a little bit longer, right? We got the Strait of Hormuz stuff, which is still. I'm going to get Robert's take on what's going on exactly there. There seems to be peace every other day, and then there seems to be rehashed the next day. So we'll talk about all the things. If you guys haven't already, please do take a second, repost the stream, and be sure to follow Roberts. We're also going to be pulling up various charts as we go through the stream. Some of them will be like on TradingView, like the normal stuff that Robert pulls up. But we'll also have some of the public charts. So I just do want to say big shout out to Public for sponsoring today's show. We obviously have a paid relationship with them. They're our headline broker sponsor of the space or of the stream. They are an investing platform for those who take it seriously. So whether you're a passive investor or active investor, you can use AI and a wide range of asset classes from stocks and bonds to crypto to options if you want to build a portfolio for like the long haul. So definitely, if you want to check that out, there's a link. It's going to be in the description if you're watching on YouTube. And if you're watching on X, it's going to be in the tweet below the screen if you're watching. And it is this chart, by the way, just so you guys can get a visual. And I'm sure Robert will pull it up as well while we're going through every now and then. But you guys are going to recognize a lot of these charts just from the stuff that I post throughout the week. So this is public. Big shout out to them for the show. Robert, I'll kind of turn it over to you. I'd love to get your thoughts on these markets, kind of where you're sitting. If you're impressed with the first half of 2026, yeah, man, where you at with everything?
Not super impressed.
Loaded question.
Yeah, not super impressed. I think, Bitcoin's bouncing a little bit, but I don't know. I don't think that we are going above 70 probably. We could get like a relief rally, but I'm pretty bearish. Economic growth and risk doesn't look very good right now, in my opinion. We got like Mag 7, which led out of 2022, that kind of stealth recession we had. The Mag 7 led out of that. They were kind of cash machines, and cash actually was getting interest. And so, they were kind of the leader for 4 years, call it ish, something like that. And now they're underperforming by a wide margin. So obviously we have, the companies that are spending the money, writing the checks, like the Mag 7, the hyperscalers, they are getting hammered, while the people receiving the money, like, NVIDIA, DRAM companies, that kind of thing, they're doing quite well. So the AI trade is not dead, and it's not like over completely, but I think that we're starting to see kind of instances of I don't want to call it a bubble, because I think that's a very loaded term, but the frothy sort of thing here with the AI trade. I think we're starting to see the starting shot of it coming undone. So that's not to say that every single company that is part of the AI trade is going to go to zero. It's not even to say that they're all going to go down, 50%. I mean, there could very well be a new high before it really kind of, comes undone. I think there's still really a lot of euphoria and froth, but the S&P 500, if you look, like the Mag 7, again, what led for the past 4 years, we're down on the year. But if you look at like the equal weighted S&P 500, it's up massively year to date, which is good. Broadening out is good, but generally when you get the leader turn into a laggard, generally that's not super encouraging. But IWM as well like this is the real economy, RSP, IWM, that's arguably much more the real economy than, the Mag 7, which is by definition just a couple of companies that are spending huge, literally like historic amounts of money. I did a little thread yesterday, but we're talking about $1 trillion of
Yeah.
capex just this year, and that's double last year. And next year is going to be double this year. So ish, so they're spending like a historic amount of money. In fact, it's more than the Apollo project, the 1930s infrastructure project. I want to say broadband, all combined.
Wow.
Manhattan Interstate Highway, like all those massive, huge, like historically large infrastructure projects. This is bigger than all of them combined. Not in dollar terms, because obviously, back then $1 million was a lot of money, but I'm talking in terms of GDP. So
Mm.
adjusting for, how you take the spend and then you look at that spend as a share of GDP. We're talking about 2% of GDP right now is going to this data center AI thing, which kind of by definition is trying to create a technology to replace humans. So yeah, like it's kind of a weird economic landscape right now to have, GDP be so hot, quote unquote. I don't really think it is. Again, once you remove the capex, which is not going to be able to continue at this rate forever, I think
Mm.
we're already starting to see it can't continue even at the rate that we're going today. You see, Meta, Microsoft, all these Mag 7 companies, they're going free cash flow negative. Their free cash flow is shrinking. So just as coming out of 2021, 2022, just coming out of that, their free cash flow was growing, 70, 80%. Now it's shrinking, 20, 30, 40% year over year. And they're going negative free cash flow, right? This is generally something you see in like, IWM for the Russell 2000. About 40% of the companies in the Russell don't make any money, which is kind of crazy
Wow.
that about half of the Russell 2000 doesn't make a
That's
profit.
just
But that's generally the kind of thing you see there, not in, 2, $3 trillion market cap companies. So, how do you reconcile huge historic capex with negative free cash flow? Well, you issue debt, and the investment grade debt market is already going to be about 1.8 trillion when you take current kind of existing issuance outside of AI, and then you add in refi, right? Because we're always rolling over debt. It is already so saturated that we're starting to see kind of issues where SpaceX, for example, right? They're maybe not technically like a hyperscaler or Mag 7, but they're kind of in that cohort. They just came out with a debt offering that just bombed. The bonds, like as soon as they got issued, they was just down only. And like the one of the main assets of a hyperscaler is a thing that by definition depreciates at like 50% every year, right? The chips, the Blackwell H2000 gazillion, right? All these fancy GPUs and even TPU, it all depreciates at an alarming rate. So you have debt, which is secured only by a depreciating asset, very, very long duration debt, too, right? This debt, we're not talking about a 1 year bond getting issued. We're talking about, 10, 20, 30-year bond getting issued. So in my opinion, I see issue like I would not buy a hyperscaler bond. That's just me personally. And you look at SpaceX; those bonds are trading quite poorly. So that's option number one. You issue debt, or option number two is you issue equity and do kind of what MicroStrategy always does, right? That at the money equity offering. Google did this and got punished very heavily because the Mag 7, the big companies, right? They were generally buying back huge amounts of stock. So part of the reason you bought these, Google, Microsoft, whoever, was they artificially are going to reduce the supply of their equity, right? So if you own something, it's kind of like some of those old crypto tokens that had like burn. or whatever it was called, right? Deflation kind of baked in. It was kind of like that, right? Where by definition, if the supply is shrinking, then the price is going to be supported. And that was kind of historically how it always was. Well, now you have them either issuing debt, which I explained the issue with duration mismatch and also the collateral, for lack of a better word, that backs the debt, issues there, or you issue equity, which again, that's dilutive. That is not a sign of strength. So,
Mhm.
I think that side of things is starting to come undone. And, the whole premise of the AI trade is that there was a shortage of compute. Well, if we just go back a day or two, Meta came out and said, basically telegraphed to the market, yeah, actually, and what I've been saying for months is after every shortage comes a glut, right? There's a shortage, prices go like this, and what happens when prices go like that? Everyone rushes to provide more of that thing, right? So prices go like this, it encourages people to come in and add supply, in this case, compute. But then you get to a overcapacity point where the only direction is down from there, right? Where after it's the same thing with oil, it's the same thing with pretty much most commodities, right? After every shortage comes a glut. And I think that, what Meta telegraphed a couple days ago and why we're seeing, today again, Qs are down 1.6%. Yesterday they were down, I think, 1.5. And the chart, just like from a TA perspective, I think looks really ugly. But
Mhm.
what we're seeing is indications that there's not a shortage of compute. There's too much compute. That this is why Meta is offering to rent their compute.
Wow.
So I think that that on the hyperscaler side, you're starting to see those issues. And then on the market technical kind of plumbing, that side, I think we're starting to really see issues. Like Kospi keeps getting halted. I mean, like every day is seeing, well, once a week we're getting a trading halt in Kospi, in the EWY, which
Pretty
is
crazy.
yeah. I mean, it's just like, and there was a report by Bloomberg last night that showed that this, and I can't remember the ticker. It's like a weird, just like numbers. But it's out of Hong Kong. It's a 2x levered SK Hynix. And
Hmm.
this is a, just kind of like the SOX L, I think it is. That's like
Yeah.
2 or 3x. It's like that, right? But it's SK Hynix, which is a DRAM or memory provider out of South Korea.
Mm.
That makes up for 60% of the daily turnover in SK Hynix. Okay. So this one levered ETF makes up for more than half of the daily turnover in SK Hynix. Well, SK Hynix makes up 30% of the Kospi, this, right? The South Korean stock market, their version of the S&P 500. Well, the Kospi, as we've seen, is incredibly correlated to the Qs mainly, but also, the SPY, because we've gotten to a point where on a market cap weighted basis, the tech companies are the index, right? If you look at the market cap weighting, it's like 40, 50% of the SPY is an AI or AI related tech company. So like even the S&P 500 is basically the Nasdaq, at this point. So
Yeah.
you have one levered ETF, more than half of SK Hynix. SK Hynix, about a third of the Kospi, and then the Kospi obviously is part of the same trade as Nvidia and Microsoft and the whole thing. So that on the technical side, you look at like margin debt. Now, margin debt as a share of total equity market cap, not nearly as alarming as the nominal figure would have you believe. But we definitely are seeing a very large increase in leverage, right? Whether it be the levered ETFs, like the SOX L, I think it is, those kind of things, right? Or 2x Nvidia, that kind of thing.
Yep.
Not only there, but in options, right? We saw call skew blow out, in these mega cap tech companies, and you look at like implied correlations, they were basically at all-time lows on a monthly close basis, going back all the way to the early 2000s. implied correlation, like the amount of skew between the index level volatility and single name vol, that skew was at the widest, right? Ever, basically, on a weekly close and a monthly close basis. This is that dispersion trade that people have talked about. Short index vol, long single name vol. Well, the long single name vol part of that was mainly calls, out of the money calls in, Nvidia and, various different, DRAM and semiconductor, all that kind of thing. So, we got to a point here too where, like, not only South Korea, their market technicals are atrocious. I mean, you had people going and overdrafting their checking account, calling it a loan, and then piling it into like a 3x levered DRAM or 3x levered, semiconductor. Like, it was out of control in South Korea. You look at their market cap, stock market cap as a share of GDP, it was worse than ours. Right? People talk about the Buffett ratio here in America being at an all-time high of like 230%. Well, in South Korea, it was even worse. And in Taiwan, it's actually even worse than that. So yeah, I think that the technicals, not only here in America, but in South Korea. I think that, there's a lot of reason to be concerned here. So I guess the Taiwan, it's too bad. Taiwan is the best one. Taiwan is like 500% of their GDP. It's crazy. La La Land. And it's all leverage, right? Whether it be the degens in South Korea overdrafting their checking account, liquidating life insurance policies to go full margin, like all of it, right? Like South Korea is just insane. But we're seeing it here too. So like all of that, and to me, I would be extremely cautious. And that's just kind of like the broad overview. I think it's genuinely even worse. So I would not be super constructive here on risk, and that includes Bitcoin, because look, unless we're going to break and you're going to tell me, yeah, Qs are going to be down, I don't know, 20%, call it 30%. Let's be conservative. They'd probably be down more, right? 20-30% on the NASDAQ. You're going to tell me we're going to be down like a third on the NASDAQ, but Bitcoin's going to be up? Now, you could argue a very specific kind of sequence, right? Or combination of factors, right? Where you could get Bitcoin and gold probably the only things going up. But I think that you would have to have,
Is that sustainable?
Well, you would have to have 20 different variables all going the right way.
Like
It's
not
a
the scenario.
Yeah, it's a very narrow kind of environment where that would happen. And it's probably not a good one, right? Like if we're in an environment where everything is going down, but Bitcoin and gold are the only, it's probably not going to be great for the average American. So, so like, Bitcoin, I just kind of look, I don't think of it as 3x NASDAQ, right? I don't think of it that way. But that's how the market looks at it. And, you can argue, and hate the market for the way that its view, right? You can hate the market and resent it and think it's wrong and that kind of thing. You can do that, but you're going to lose money, as I learned with oil. Right? Like this oil's a perfect example of this kind of mentality, right? Where it's like, well, inventories are getting drawn at the fastest rate, like basically ever. We're approaching tank bottoms at Cushing. The SPR's fallen to the lowest level in like 45 years. You got the Strait of Hormuz not open at all, right? Like every week, like you mentioned in the beginning, there's all these things, right? There's 13 million barrels per day of shut-in capacity. Still going to take another month to get up and running, even if the Strait of Hormuz really actually opens. Not to mention the Russian refining capacity that's just totally decimated, right? Like they're going to have to import gasoline now from India, because everyone ignoring Russia, right? Because the focus, but like all of that, right? And oil just down only, you know what I mean? So demand was not constrained at all. There was no real demand destruction, and yet oil will just, I mean, it's like a twin tower, we got the twin tower on oil, and you can call that manipulation, you can call that all sorts of whatever you want, right? But at the end of the day, that's the price is the price, you know what I mean? And at the end of the day, we're trying to make money. I don't think that I'm actually wrong on oil. Like I do think that it probably moves higher from here. Not back to, I don't think it goes to like, 150 or anything, but I think that I was just tired though. I was tired of waking up every day and like the numbers on my screen showing me you are wrong, you are wrong, you are wrong. Now you're more wrong. Like,
Yeah.
you can argue with markets, you can hate them, you can think it's BS, but at the end of the day, like we're trying to make money, not be right necessarily. And like, a perfect example is SMH or any of these, Michael Burry's probably not wrong. But
Yeah.
his Palantir SMH puts are like not doing good. You know what I mean?
Yeah.
So yeah, I don't think that Bitcoin is seen as money, even though I might look at it that way, or
Yeah.
did store
One,
value or
it
digital
could be.
gold or
Yeah.
yeah, like that's not how the market looks at it. You can
Yeah.
run a correlation coefficient with Qs and it's like 0.8,
I know.
it's very, very strong positive correlation.
Mathematically, you can be like, no, that's not how people see it.
Yeah, quantitatively, like people talk about the Bitcoin correlation kind of like as this like theoretical thing. It's like, guys, just run the correlation coefficient. Like
Yeah.
you can get the
That's,
data,
yeah.
and once you do, you see it's basically Qs. So, yeah, kind of a
You want
lot.
to be less emotional too. The numbers probably help, so you have a little bit of clarity and something to back it up. Like that's why Robert has no problem jumping into a Mario Nawfal space with like 42,000 people in it and debate back and forth on something that's going on the other side of the world because the numbers are there. So that's interesting, dude.
I probably got shaken out on oil. Look at that. That was the low. It had to fill the gap, and now it's going to move higher.
Oh yeah, oh 100%, of course.
I got shaken
Time
out probably
to
at
head
the
back.
low.
Had time to head right back to where you thought it was going to go. Now that
Yeah.
it's with you out of your trade.
Yeah. Well,
The
I don't care. I lost like
go-to move here.
1.5% of
Um,
my account.
I saw Lynn Alden tweeted about the yen. I saw you responded there. I also saw you mentioned jobs a little bit and just or the labor force as well, labor force participation, a couple other things.
This was not a red card. I have
Oh
to
my
use my
god, dude. Okay.
platform to
Yeah,
say
this was interesting, bro. I saw
that
that
was
too.
not a red card.
Yeah, I could see why they gave it a red card. I agree with you. I'm not so sure that was a red card, but we still
Only
pulled
because VAR, right? What?
Yeah, dude. VAR. I'm not sure what to think about that. Because in
It's
my head, I'm like,
horrible. It's
okay, was he
awful.
off or was he not? Like that's all I really want to know. But the stuff that I'm seeing, I'm kind of like, I don't like
Yeah.
this. You know what I mean? Like,
I was a licensed soccer referee for, I don't know, 6 years, 5 years, something like that. And so I'm not just like some random person. Like, this is not a
yeah.
red card.
Did I
Yeah.
ref for
VAR has
seasons at a
been a
rec league?
nightmare.
I ref for 2 seasons at a rec league when I was like, I don't know when that was. It must have been after college. And I remember I ref like a couple seasons, and I was like, I don't know if I want to do this anymore.
Yeah, it's horrible, man.
Refing
Like,
is hard, dude. I'll tell you what, refing's hard. Like, you got
yeah.
a lot of things to pay attention to. Like, big ups to the refs for doing their thing. The
Not
World Cup.
this one. This one was not great. Like,
Yeah,
generally,
that
I'm okay
was
with like,
best.
because I know the other side, but this one
Sure.
was pretty bad.
But we have a
But
real
hey,
chance here. We have a
yeah,
real
we're
chance to beat
going to
Belgium.
round of 16. Yeah.
To have Senegal up 2-0, I think it was. I mean, they lost eventually, but like
That
to
was
have
a
a
crazy
team,
game.
yeah, to have Senegal up 2-0, I'm like, dude, United States, if we pull up and we show up that game, we should. There's no reason we couldn't win that game, which puts us in this. That would put us in the semifinals if we beat them, right?
Belgium, yeah.
Yeah, that's like super. This is like the first World Cup where we actually have a genuine path to the.
Yeah.
I've been saying like probably a few weeks ago I said like I think we can make it to the quarters. I don't know if we can. I don't know if we got past that. But now, dude, now seeing that we're up against Belgium in the quarters, I think it's very possible we get to the semis. We get to
Yeah,
the semis,
Belgium didn't impress me.
you never know.
They're pretty good,
Yeah,
Generally, I would put them in the top
Lukaku, De
5.
Bruyne, yeah, they're cooking
Yeah,
usually.
yeah.
I mean,
Yeah,
Lukaku is
generally.
good, dude. Lukaku, like, he's like the most hated on striker. I even hate on him, but he still puts away goals. So it's like it's hard
Yeah.
to it's hard to argue against him. I like sometimes I'm like, dude, this guy sucks. Brother can't
Yeah.
even dribble. He can't shoot. He
Yeah.
can't pass, and then boom, scores 3 goals. And you're like, okay,
Yeah, they haven't had a great tournament, to be
yeah,
honest. Like that Senegal game, if people haven't seen it, definitely watch a recording. It was pretty good.
yeah, that's cool.
But
I didn't really watch the World Cup.
oh yeah, man. Soccer was my life. I played
Yeah,
varsity high school, but I also played what's that?
have we ever talked about this? Like, I also played soccer growing up. I went all the way through college. Like,
Yeah.
we talked about this.
Yeah, you were a
Oh,
defender, I think, right?
I was. I guess I played. I guess I would probably consider myself a midfielder, but I played every position.
Yeah, I was a right wing back.
Okay, right wing. Oh, dude, I'm sure you were fast as the lightning.
Yeah, I also ran
winger.
cross country, which
Yeah, you had that.
helped.
That's what you need. Yeah, that's what you need. Honestly, dude, if I knew how much fitness was like the prime foundation of soccer, like if you just had your conditioning in check, everything else could be taught. Everything else could be improved on. But if you can't get your conditioning in check, you can't do anything. Like you're 10 minutes into the game and you're toast. You know, you're
yeah. You run an average. These guys that, if people don't know, you run an average of like 7-8 miles.
Yeah, dude. These guys these guys cover distance on these games, especially the World Cup. It's like the most important game of their entire life, and for a lot of them, they're going to get one chance. So it's been a really high production World Cup, dude. I've been really impressed. I've really been enjoying the production value, the content. Like it's like the one time where I'm like, the social media, huge plus sometimes. Like the edits that are being made, I'm like fire.
Yeah, I got SoFi right here, and I was gonna go, but the tickets were just like atrocious, like $18,000 for a nosebleed seat.
Yep. So. Apparently, there's a place online where people are able to like not pay those kinds of numbers, and apparently it's real. I don't know, like they're like a couple $100 kind of thing, and I'm like,
oh wow, yeah, I do that.
There might be a place where those are available. I haven't been able to find them.
The problem though is like from this point on, it's all like higher. It's all the semis and the
you're paying. So. I mean, I found a few that were in the knockouts or in the group stages that were like a couple were like 1,500. They're decent seats, honestly. I just couldn't make it there in time, and then there was a few that were like 3 to 4K, and I was like, it's 3 to 4 grand really worth a World Cup game? I'm like,
yeah,
I don't know.
Inflation, man.
Yeah,
inflation. We got I mean, this is the other thing, right? Like on an economic view, right? The situation, we have growth that is basically single-handedly being carried by the AI trade and the $1 trillion capex. Right? You remove that from GDP, it's zero basically. It's like 40 bips. So growth is like not that great, except temporary growth for the build out of the replace human technology. And then, inflation, is due to what was going on with oil. It's going vertical. Now, I think that this probably comes in starting pretty much immediately. I think that we're kind of in the turn between where you want, kind of max long equity positioning to where you want to be much more cash. And eventually, maybe I might have been a little bit early, but eventually you're going to want to be here. So yeah, I think that that's kind of how I'm looking into the second half of the year is much more. I mean, and I've been saying this for months now, that the risk in equities to get another, 5%, probably not great. Right. And like, look, since over the past couple months, we might have gotten like 3% here, like April.
To enter at that 7%, the kind of ROI you're going to get, it's tough to make that case.
Yeah, because you had to survive. You had to survive a what was this drawdown, like 4%, 5%?
Yeah, it's a 1-to-1 trade. And you're on a 1-to-1 trade, and you're at the top of a basically not a parabola, but like kind of.
I mean, a parabola.
Depends which time zone, but pretty much up only. With
like you want
to, but it's up only.
you want to be in a 1-to-1 risk reward here, like no, I don't.
I'd rather enter a leveraged infinity long or an infinity short on Trump token and just let that thing burn to the ground eventually over the next 10 years.
Yeah, I mean, I gotta say
that you could make that bet on, but I should have made that bet 6 months ago on some of those altcoins because I knew they were going down. Like when I got out of all the altcoins, I was like, dude, there's only one direction these are headed, almost all of them. And it's clear as day that nobody sees the value in any of these things. I was like, these are cooked.
Yeah.
For some reason, I didn't
I
enter any shorts. I just kind of was like, let me just get out of them and just enter cash and Bitcoin. But
Yeah, I think over the next 12 months, bonds are gonna get a pretty strong bid. I
what
think
kind of
we've
movement are you talking though? Like, where would you expect it to be in 3-4 months?
3 to 4 months. I don't know.
If you get if you get what you want, I guess maybe that's too far out. But
Well, I'm kind of like my first kind of zone is 100 on TLT, which would be about a 4% 30-year yield, which I
yeah,
think is pretty reasonable in a slowdown. I mean, the slowdown we got in the summer 2024, we got
mhm,
there, TLT got to about 100. And, if you've been a maniac like me going against the grain for the past couple months, you're gonna make a lot of money, on TLT calls. So even with just a move to 100, which would be about a 4% 30-year yield, but you got to move past that, and you're making like serious money. Like a move to 110, kind of 100 to 110 is kind of like the general. You have to remember with the chart, like this was a shutdown of the global economy. You know what I mean? Now, if we get another black swan, right, and we get a 1% 30-year yield, you're
yep,
gonna make like a 50x on
yep,
TLT calls. I don't think that though. I don't think we're going back to a 1% a 30-year yield. I think we're probably, I'm kind of just looking, but look, even that, the risk reward, talking about risk reward, the risk reward of that move is way better. I mean, we have like this perfect double bottom here on duration. So you could put a stop loss like right below there.
mhm,
And this is not dividend adjusted. This is just price to return. And if you target a move to 101, that's a 5 to 1 risk reward, or 5 to 1 reward to risk, or
mm,
1 to 5 risk reward. That kind of thing. And you get paid in TLT shares. Right now, you're getting paid 5%, which is why I used that number earlier with equities. Right now, you're getting 5% risk free.
yep,
Um, and yes, inflation. What's the real rate? Well, if we look at real rates, you're actually getting a positive real rate. And of course, TradingViews does this. I don't know. Every time I need it to not do this, it does it. But if you look at the 10-year, you're still getting a positive real rate. And if you look at the 30-year, yeah, it's not going to cooperate. If you look at the 30-year, you're still getting a positive real rate. So yeah. Now, if you're in the 1 year or T-bills, right, in cash, you're getting debased. Technically, currently, you're getting debased. You're losing money to inflation. Right now, at the rate of inflation we got at the last print, which again, I don't think it's going to be that in a couple months. I think it's going to come down. But at that rate, at 4.2%, right now you're losing about 60 bips to inflation per year. Now, again,
mm,
to me, even if we kept at 4.2% inflation for the rest of the year, I'd be okay with that personally,
mm,
because Bitcoin's lost what, like 50% of its value
yep.
year to date,
That's a
right?
good point.
So and like I hear this a lot from Bitcoin people, like Maxi type, where it's like, yeah, but I'm getting debased at 50 basis points.
Yeah,
Meanwhile, Bitcoin is down
I know that.
60%. You know what I mean?
Yes, that
Um,
that that is a conversation that I'm not sure could be had because I'm not sure anyone's willing to, in good nature, like in good spirits, like debate that with you because if they're on the other side of that, they've kind of made their bed.
yeah,
Obviously, like they're down. Oh, well, okay, they're not down. They probably bought at $500 Bitcoin, and that's why they're in that position. You know what I mean? Like they're good no matter basically what happens with Bitcoin, and that is an angle that I feel like sometimes they leave out. Also, the other side of it is that they're typically hedged with like 70% of their portfolio in Qs or SPY or something like that, and that's not something you hear from them very often from a lot of the maxis I found. Some maxis truly are, but
like short queues
um,
or like IBIT puts.
or just like they basically they're way more diversified than I thought. Like they're they're
Oh,
they're playing in
yeah,
every market, and they never talk about it. I was always just like, if you didn't know any better, you'd think you were all Bitcoin because that's
yeah,
that's how you present. And even if you're like, well, that's not what I meant, it's like, no, that's how you present. And like
yeah.
no one could argue. There's no way you could argue against it. And so that was the only tough part I found with the maxi spaces. Like I still think there's value in educating people about Bitcoin, but you're talking something like that where you're like, this is someone's actual money. If someone's talking about putting in large amounts of their like retirement or things they've saved up for a long time, because they believe this is a sound investment, just for it to drop 50%, and they should have just gone with you, into something that's more boring that people know about, that's fiat system. But it's like, what game are we playing here? If you bought in a $500 Bitcoin, you've changed your life. You're up a bajillion X. That's like,
Well, not only did I not lose, now I sold half my position at 80-ish, like 79. So whatever the drawdown from there is, right, is what I've protected. Not
yeah,
only did I not lose that money, but now I can buy more Bitcoin. You know what
there
I
you go.
mean? Like if your whole
Yeah,
if your whole goal is to buy Bitcoin, more Bitcoin, which kind of, like I'm kind of aligned with them in that way,
yeah.
but like then you're gonna want to, you know what I mean? So I
Seems
don't know.
obvious. Seems like common sense. It seems very rational. Hey, I don't want to lose all my money. I'd like to have cash available to
Yeah, and
buy.
look, and don't and a lot of them went into this money market fund that went into a bear market. You know what I mean? I've
Right.
never personally heard of a money market fund that goes into a bear market.
Yeah. What are we
Um,
feeling here? It's recovered, but like not quite enough. Like it's recovering
it's still
nicely.
down 9% from
Yeah.
par. So
Yeah.
yeah, I don't know. I don't know. I don't, I'm not short or anything. I know a lot of people that own it, so I want it to get
Yeah.
back to par. But
Same.
I wouldn't long it here. Now if you longed it down here, if you weren't buying in at par, and you were only entering your position down here, that's a great trade. In
Yeah.
just a couple days, you've made a lot of money, especially if you did it via options.
Yeah.
MSTR2, look, just today alone is up 7%. I
Can you
pointed
speak a
out
little bit on MSTR actually from like I was looking at MSTR as well because I'm just kind of
it's up
making a list of
15% this week
I'm
alone.
making a list of stocks I think make sense long term, and I'd like to put MSTR in there. I just don't see a world where I feel good as a common shareholder of MSTR.
Oh yeah, I would.
But
The
even at
only
these
time I
levels,
would, I,
so I'm just
I,
kind of like,
the only time I'd buy MSTR is like as a trade.
yeah,
And look, a lot of people were buying here,
yeah,
and they're like trying to claim that this is some kind of validation that the whole thing is not totally screwed. I
yeah,
don't know, one way or the other. It could be a complete Ponzi scheme and it could just completely implode. I don't really think that's probably going to be what happens. Um, but
same. But
it,
that's
it
why
could
I'm
also be
worried. Like
fine.
I in my head I'm like, if you're gonna get into MSTR under $100, like that's a pretty decent deal it seems like. But then you're like, but do you see anyone ever buying this thing all the way to $500,000? Why would they? Why would you get into MSTR? Like, what
Well,
is the benefit?
I mean, not only the liquidity environment, the macroeconomic environment, but the people, it's the same thing with equities. You can have a view that earnings are going to improve, and or you could have a view that the PE multiple is going to expand or compress. And what we saw here, part of the reason it got this parabolic run, which is when I started to get cautious until people warned people was there. Part of the reason was the MNAV expanded to, I think, like 3.5, according to the kind of traditional MNAV. Now, the real MNAV is not one, like the website says. You have to take into account the
Mm.
converts and stuff. So, yeah, like the real MNAV is 0.5, 0.6, I think somewhere in that kind of general range. So, look, the entire scheme is diluting. Now, look, they'll say it's accretive because Bitcoin per share goes up, but yeah, he has pointed out himself that the common equity holder is the one that would kind of get wrecked the
I
first,
know. That's what I'm saying. I'm
so
like,
like, you look, I don't know, I would trade it, but I would never like
exactly.
invest in it.
That's what I'm saying. It doesn't seem like an investable asset if if that's the rhetoric behind MSTR. I'm like, dude, so this is the ship sinking, is what you're saying. I'm like, you're gonna
y-
have a bunch of Bitcoin, you're gonna have a bunch of cash, but like there's no reason to have that stock. Like I'm trying to figure
um
out what is the win condition for the stock if everything about the stock is that it will be the one that takes the hit.
yeah,
You
yeah,
know,
by definition, it's gonna be the lowest, in
people are
the
like, well, it won't matter, like bull run. Yeah, but I'm like, right, but Yes. Like,
Well, the entire scheme, one of the issues I have where not like one of the reasons that I think one of the risks that I have always seen with it, with the whole complex, is there's this fundamental assumption that Bitcoin just always goes up.
yeah.
And again, I, am quite bearish kind of economic growth and risk broadly. So in a world where the Qs are down, 20, 30, 40, 50%, and Bitcoin is down more than that, you know what I mean? Because it's not going to just match the Qs. Remember, beta works both ways.
Yep.
We outperform to the upside, but we underperform to the downside. And we have bigger downside moves. Like if Bitcoin goes to 10K, that is in a recession. Remember, also, Bitcoin's never lived through a real traditional business cycle, like a real true recession, a real true credit cycle. Bitcoin's never lived through that ever, period, zero. So, like Bitcoin at, 10K, 15K, 20K, who knows where it goes? I don't know where it's going to go. Kind of know when you see it, but like, you don't want to be the fundamental one of the fundamental flaws with the whole MSTR thing is like, well, Bitcoin just always goes up. And so as
Mhm.
Bitcoin goes up, the value of our Bitcoin goes up and right? Like the flywheel works theoretically as long as Bitcoin goes up. Well, that's
Yep.
kind of a large assumption,
You can't have
in
any
my
lulls
opinion.
in that. Like, you can't have like
Well,
you have the
they
1 year bear
can.
market
I
built
mean,
in, but
they can tolerate some amount. I forget exactly if it's like 1.8 years or something. There
they can
is
tolerate it, but like, what
um
does stock look like
Yeah,
in that
exactly. No, no,
it can
it
survive?
can do it without blowing up, but does that mean that MSTR is
Exactly.
not going to be at $20?
Yeah.
No. So like yeah, so I wouldn't want to own it, but yeah, look, Bitcoin for the rest of the year probably, I mean, it's really hard to ever forecast Bitcoin prices. I basically have like a trailing stop to get back long at 80. Um if we get back to 80, I'll buy back at the same price I sold at. You know what I mean? But yeah, I think it'll probably move lower if I had to guess, which is good if you can increase your dollar revenue. Look, the other issue is that people, and it kind of goes into Bitcoin just always goes up, is this view that the dollar can never strengthen, this view amongst Bitcoin crowd that the dollar can never get stronger. Well, it gets stronger all the time, as we're seeing, right? The dollar is breaking out. DXY is kind of the, versus other fiat. But, we've started to break out to the upside here on dollar relative to other currencies, but also we're starting to break out in dollar relative to gold, which, uh, is 1,000-year-old money, you know? So yeah, the dollar can strengthen and it will strengthen in deflationary and uncertain environments. Um, it's just how it works. This is the safe haven. You cannot like that, but that is the reality. Is that the dollar will strengthen in uncertain, especially with a hawkish Fed, which of course is kind of the other variable we didn't mention. We have Kevin Warsh, much more hawkish. Not only Kevin Warsh, uh, arguably more on the hawkish side, but the committee is quite hawkish right now. I think we've reached kind of peak hawkishness, and I think only from here, some of those rate hikes that are priced into the yield curve will start to get priced out, and we'll kind of get a stealth easing, right? Because right now, if you look at the 1 year, I think it's like 35 bips above the Fed funds, so 31, right? So about the bond market's pricing in about a one hike, 1.5 hikes over the next 1 year. So, as that gets priced out and hikes aren't delivered, you don't have to even cut, right? You don't have to have them cut rates, even if they just stay flat and those hikes start to get priced out, you're going to get stealth easing, right? There's no rate cut, not the rate stays, Fed funds is going to stay right at 3.5 ish, right? But you get effectively an easing of financial conditions. Then once the cuts get delivered, you get even more easing. But for now, the dollar strong, hawkish Fed, and again, I think the bond market's kind of a little bit too hawkish. And I think that, if you could make money without using, 50x leverage for the 1 year or the 2 year, I'd be trading it. I guess you could with futures, but I'd be buying, the 1 year, the 2 year here. So I would definitely have been buying it when it had two rate hikes priced in, which is not
Mm,
possible. If we got two rate hikes, that would blow out the interest. Interest is already growing at 12% year over year, which is much like triple GDP. So it's already growing quite rapidly. It's already 1.2 trillion per year, 3.5 billion per day. You get a rate hike with 90% of gross issuance in T-bills, and that rate hike pretty much immediately gets translated into higher interest expense because all the debt is constantly being rolled over every month, 3 months, 6 months, with T-bills. So yeah, that immediately gets kind of transferred into or transmitted into much higher interest expense. Well, we don't pay interest out of tax revenue or anything silly like that. We just issue even more debt, mainly T-bills now. Cash markets is where we're financing our government. So we just issue even more debt. So that just means interest up, deficit up, deficit up equals more debt issuance, more debt issue, right? So that's kind of the death spiral, the debt doom loop that people
the
talk
more you
about.
know.
There's no so like we've removed the Fed's independence,
Yeah.
and that didn't happen with Trump. That didn't happen with start with Trump. That didn't start with Bessent. That didn't start with the current administration. That started with Biden and Yellen, and
Mm,
activist Treasury issuance, which was responsible for, according to Rubini and I forget the other author of the paper, about 50 basis points of yield suppression on the 10 year. So you take whatever the 10 years at, 4.47 now, add 50 bips to that, and that's where if we were issuing with the usual maturity profile, the 10 year would be about 50 basis points higher. Now, again, you can call that manipulation.
mhm.
If they were to reduce duration issuance even more, you can call that manipulation, or you can just get behind the trade. You know what I
Yeah.
mean? This is part of like under a fair free world, should the 30-year yield be higher? Should TLT be lower? Yes, but we don't have that. We're never going to have that, at least not in the next like couple of years. You know what I mean?
Yeah.
So yeah, and we've seen, look, to the start of the year, we've seen a very, very dramatic flattening of the yield curve. Again, not bullish for risk. Now that's kind of vacillated between bull and bear flattening. And recently we started to get, a bit of an unwind of that flattener with a steepening yield curve. That's mainly been a bear steepener, which again is generally not like what you would love to see. But today and yesterday, we've been getting a bull steepener, which is what you would get ahead of rate cuts, right? This is what you get ahead of every rate cutting cycle. You get a bull steepener, where all rates are falling, all bonds are moving higher, but the front end of the yield curve is moving. Those rates are moving more than the long end. So the spread is growing wider, but it's mainly due to the front end moving lower. That's in anticipation of Fed rate cuts.
Mm,
So that's what we've been getting the past 2 days. But look, like the yield curve, I think, people should always keep an eye on the 10 year. But I think you should also make sure that you're watching twos 30s or twos 10s, or find a spread that you think gives you good information, and keep an eye on that,
yep.
because that differential, that spread is going to give you even more information than the yield curve just the nominal yield on its own. I would also recommend, for people that are new to the bond market, you have to look at the composition of what goes into a 4.5 10 year, right? Right
Mm.
now we have a 4.5 10 year. Well, like 2.3 of that is inflation break evens, which, by the way, if you want to read on where inflation is going, it is not going higher according to the bond market. So this is inverted, but break evens are down significantly.
Oh, by the way,
This
Robert,
is
we'll
from
wrap on this point. I just realized the space is starting here in a second,
Yeah,
so
no worries.
we'll wrap on this final point here.
So the bond market's telling you inflation is going to plummet from here. Right now, during the peak of the war, we had like a 2.5 10-year break even. Now it's down to 2.2. So yeah, and look, the other thing too is if you look at like relative sector performance in the equity market, it's pretty defensive. You know what I mean? So yeah, I would be pretty cautious like for the rest of the year. I think the amount of risk just in the time we've been doing this stream, S&P 500's lost another 0.5%, and the Nasdaq's lost a full percentage point just since we started the stream where it was already down 1%. You don't get that with cash. You don't get that with bonds, which are paying you 5% right now if you're in TLT, or 4.5% if you're in IEF, which is the 10-year. So yeah, look, and we're starting to get currency interventions out of the Bank of Japan. This is probably going to continue into tomorrow, where there's U.S. market is closed, very thin liquidity. This again, yeah, one more risk of a carry trade pressure for risk. That, personally, I want to, the risk reward of risk right here just doesn't really look very good given the amount of risk. And that's not even counting a return to war with Middle East, because we didn't sign an actual peace deal, just signed an MOU.
Gotcha.
Oh, and jobs, not good. Like, not only did we miss expectation by 50%, but if you look at the actual underneath the surface, the labor force has shrunk. Employed workers fell by 500,000. I'll say that again. The number of employed people in America fell by 500,000. And if you look at those not in the labor force, that grew by 832,000, almost a million. So like the labor market is not nearly as strong as people think. Jolts kind of showed you this. People always look at job openings, which is the headline part of the Jolts. But if you looked at the hires, it would have told you like only like 4 out of 26 sectors had any positive hiring. So yeah, the US economy's, we could like muddle along here, but probably not going to be great over the next 12
Yeah.
to
No,
18
I'm
months.
actually glad you brought that up as the last point, because I saw some of the stuff in the timeline. Yeah, that's interesting. Dude, lots to pay attention to for the rest of the year. I saw Saucy in here, said freaking well said, Robert. Yeah, definitely. Appreciate you coming through, Saucy. Look, dude, lots to pay attention to. For everyone who's watching, look, lock in. This is it. Second half of the year starts today. We'll take on yesterday. If you haven't already, definitely take a second. Be sure you're following Robert to make sure you're staying up to date with everything. Be sure to repost the stream as well if you enjoyed it. We'll be back on next week. Should be on next week. Otherwise, look, if we don't see you again, hope you have a great day. We'll be back on Spaces here in like literally 30 seconds. Talking tokenization, RWAs, all that good stuff. And then with the markets, with the traders in a few minutes. Should be a good time. We'll take everybody. We're going to start the space here in just a moment. And we'll see you there. Take care.
See you guys.
Yeah, man. We'll see you on the Spaces side.